Hello, fellow investors, and welcome back to Borex Investing. So today we're diving into a rumor that's actually been floating around X quite a bit, and the rumor is that Palantir is going to be issuing a stock split in the near future. Now, stock splits don't actually change the value of a company, but they often change who can participate and how they participate. And that can actually have a surprisingly big impact on price action, at least in the short term. So today we'll break down why splits can actually be bullish for a company like Palantir. We'll go over some famous examples in the past like Apple, Tesla, and NVDA, and we'll look at what happened after their stock split. And finally, I'll try to give you a critical take on why this really may not be as big of a deal as some seem to think on X. So let's get to it. All right, so first let's just cover the basics. A stock split just gives you more slices of the same pizza. So if you own one share at $200 and there's a 4-for-1 split, you end up owning 4 shares at $50 each. So your total value doesn't actually change. It's purely cosmetic. But here's the interesting part. In markets, cosmetics sometimes matter. So why can a stock split actually be bullish? Well, for starters, options become cheaper and more liquid. So right now, one options contract controls 100 shares. With Palantir trading today at around 180, a covered call or cash secured put ties up $18,000 per contract. And that's actually a big commitment for smaller traders. A split lowers the entry point, makes the strikes closer together, and tightens the bid-ask spreads. Also, there's the topic of psychology. Investors love round numbers. A $20 stock feels more buyable than a $200 stock. And Apple literally said this when they split in 2020, that it made shares more accessible to a broader base of investors. Also, a stock split is quite a signal from the management team. Companies usually split after a big run and when they have confidence that momentum will continue. So we can think of NVIDIA's 10-for-1 stock split in 2024. They didn't do that in a bear market. They did it after blowing out earnings and guiding even higher. So it also becomes a catalyst event. Just announcing a split can create buzz that drives extra demand into the stock before the split date. So it's kind of like free PR right when management wants some attention. So we have to remember that Palantir itself is a very interesting stock. Everybody agrees that the products they deliver bring incredible value to enterprise and governments, but a lot of professional investors say this stock is overvalued when you look at the price to earnings and price to sales. So even Citron, who was famously shorting Palantir a few months ago, causing it to fall into the 150 range, was flat out saying, hey, this is a great product, but the stock is extremely overvalued. So this put some pressure on the stock downwards in the last few months, but the recent rate cut and the news that the UK military will buy more than $1 billion in Palantir software over the next 5 years has pushed the stock price up near all-time highs in the 180 range. And by the way, with Palantir setting up a European headquarters in London, I think more European governments will start utilizing their tech as they kind of start rearming and spending more on defense to fill their NATO quotas. So this might be very bullish for the stock and really help the company grow into their large valuation with more government and commercial contracts coming in. But anyways, back to the split. A Palantir stock split would likely create a wave of headlines, retail chatter, and maybe even options activity that could push shares much higher, at least temporarily. So let's take a look at some real-world examples of how splits have played out in the past. So NVIDIA, 10-for-1 split in 2024. So they announced this on May 22nd, and shares jumped after hours the same day and kept climbing into the effective split date in June. But the real story is really that NVIDIA was already crushing earnings, so the split really just added more fuel to the fire. In August of 2020, Apple did a 4-for-1 split, and Apple said outright that this was really to just make shares more accessible. So shares ran into the split date and then consolidated for a bit, but long term, they kept rising because, well, it's Apple. Now, Tesla had a 5-for-1 split in 2020, and the stock absolutely exploded after the announcement. It was up more than 60% in 3 weeks leading into the split date. Part of that really was just pure hype, but it shows how powerful the psychology can be. People just suddenly perceive this stock as more affordable. All right, last but not least, Amazon had a 20-for-1 split in 2022. So here's the cautionary tale. Yes, the split made the stock cheaper per share, but 2022 was really a tough year. Macro forces such as inflation and rising rates really drag the stock down after the split. So the takeaways are really that splits amplify the existing narrative. If fundamentals are strong and the market is bullish, splits can actually accelerate gains. If the macro backdrop is rough, the split can totally get completely ignored. So right now, with this bull market and low rates, a split actually might send Palantir up even higher. All right, now let's put on the analyst hat and be a bit critical here, because not everything about splits is sunshine and rainbows. We have to remember that there's no change to intrinsic value. A split doesn't make Palantir any more profitable. If the stock is overvalued going into the split, you're still holding an expensive stock, just with more shares. Also, we have to remember that correlation does not equal causation. Stocks rise into splits mostly because they were already strong. So you can't confuse the split with the reason for the rally. Then there's the post-split hangover. Sometimes the man gets pulled forward into the announcement, and then after the split date, when the buzz fades, the stock can trade sideways or even pull back. And then with options, we have to remember that they can cut both ways. Yes, they get cheaper, but it also means more speculative day traders pile in, which can really increase volatility. So we have to remember that we have to watch management's timing. If Palantir did a split during a weak growth quarter, the market may see it as a distraction tactic. So you're going to want to see it paired with strong earnings and raised guidance to confirm management confidence. So my season view is this: a Palantir split would likely be short-term bullish, but medium and long-term performance will still be all about fundamentals, revenue growth, margins, new government and commercial contracts, and how fast AI adoption really accelerates. So will Palantir split its stock? Well, maybe. It wouldn't surprise me if the management team considers it once Palantir consistently trades above the 180 range. So if they do, history suggests we'd get a nice run up into the split date, but just remember, a split is not a magic wand. The real driver will always be earnings and growth. Anyways, what do you think? Would a Palantir split get you more excited to buy shares? Drop a comment below and let's discuss. And as always, if you got any value from this video, please like and subscribe for more content like this. Thank you. I'll see you next time.